Hey, good afternoon, Rich Measures, Dan Sugar with TrendlineBreak.com. Here's my third video. I'm doing a series of 4 to 5 minute videos. This is the third installment on methodology and strategy. And today we're going to cover introduction to trend lines, intro to trend lines. So if you've been around the markets for a while or read some good books, you've heard of John Murphy. He wrote these books in the late 70s and early 80s, Technical Analysis of the Financial Markets. A lot of people consider him, one of the Bibles of technical analysis. Been around 45, 50 years, several good books. Here's one of his quotes, folks. This is from my master class and some webinars I do. The trend line is perhaps the simplest and most valuable tool available to the chartist or trader. Simple and valuable. Very good. And then the second one is the violation of a trend line is often the best warning of a change in trend. Whether you're on a 5 minute chart and you're getting an intraday trend from in the morning it was strong and then in the afternoon it was weak, or from an investor standpoint, after a 3 or 4 or 5 year trend on a weekly chart, you might get a trend line break. And as traders and investors, a major thing we're always looking for is when the market goes from strong to weak or weak to strong, or when the market changes from uptrend to downtrend or downtrend to uptrend, no matter if you're a day trader, swing trader, position trader, or investor. Once you know trend following and trend lines, you can apply it to any strategy, any time frame, and any asset class, stocks, ETFs, futures, forex, and even crypto. So here's some basics, but what is a trend line? Again, in my long career, I've seen and back tested and traded a lot of different strategies and methodologies, but in my humble opinion, trend following and trend lines, nothing is better. Nothing else generates more low risk, above average reward, above average probability opportunities, investments, or day trades, or anywhere in between, options, futures, ETFs, etc. Nothing works all the time. It's not foolproof. If you're looking for foolproof, go to real estate or get a day job. But they do generate a lot of good risk reward setups and a lot of high probability. So, how to construct a trend line? You're just basically grabbing in an uptrend, you want to grab the swing lows or the pivot lows. Now, you might have two separate trend lines on the same chart, right? Here's the major long term one, and then here's another shorter term one on a slightly different higher angle. But you grab the swing low or the pivot low and you connect the lows, right? There's some nuances if a wick goes past it by a little bit, whatever, but that comes with experience and knowledge. But basically, you're grabbing the lows, not the body, but the wicks and tails, or if on a bar chart, the lows, and you draw your trend. And then a downtrend line, and 3 touches is confirmation. 3 touches means you have a trend. You got to get that third touch for confirmation. Here's a good example of a downtrend. Right? You have a swing high or a pivot high. And then there's a second one. Pardon my Bernedoodles. Hey, relax. They see a cute golden retriever going by. So, but here's a nice downtrend, folks. And look, when you get above a downtrend line, the trend changed. You had a little riffraff, a little bit above, a little bit below here, but many times it's a clean break, and it's obvious that the trend changed right at that inflection point. And you always know where your risk is, folks. One of the beauties of trend lines and patterns is you know where you're wrong, and thus your stop goes there, right? Why would you risk, $5 a share on a Microsoft trade if you know you're wrong, 250 away from your entry? So risk 250 per share, not 500. So you always know where you're wrong. But here's another, and you can draw them on candle charts, you can draw them on line charts, you can draw them on bar charts. I have some line charts here as well. Upper left is daily on the S&P, 8-hour chart upper right, 4-hour chart lower left. We broke out of a wedge, which is two intersecting trend lines a couple days ago, and ran up nicely about 40 points, 35 handles on the S&P. And then in the bottom right is a 1-hour chart. And look at that trend line break a couple days ago on the 15th. Today's the 20th, so 5 days ago, a nice trend line break on a line close only chart. And then here's a daily chart. and you can see several nice trend line breaks. Today's Fed day, so in 2 hours or 1 hour, we have the Fed release. But again, learn trend lines. If you have any more questions about them, email me at dan@trendlinebreak.com. I do have an incredible 5-hour masterclass. I have between 800 and 1,000 testimonials and social proof from people that were new to trading, that became successful, or that struggled for 2, 3, 4, 5 years. Learn trend following, learn risk management, learn psychology, and learn position sizing, and put it all together. You need a strategy that has an edge, position sizing, risk management, and some psychology. The edge starts in your head. So, but hopefully this helped. Learn more about trend lines, and look forward to my next video. Will be 3 major applications of trend lines. Thanks, everyone. See you soon.